How to repair your credit and improve your FICO scores. And this is according to myfico.com. So in other words, how to restore your credit the FICO way. Now, I will go ahead and let you know that if you haven't already, you want to get access to the free credit class so you can understand how to improve your credit using the rules that FICO provides, as well as have a strategy that can help you hit those goals, whether it's debt elimination, increasing your payment history, things of that nature on a easier path. Get access to that free credit class. We got, people who've had great success just from that free information alone. And then, of course, it, positions you to speed up the process if you so choose to do so. Now, how to repair your credit using the FICO scoring model, the FICO way. What up? You got Mr. Smith, 0.5 of Mr. and Mr. Smith, and in this brief video, I'm going to talk about everything I just said I was going to talk about. Now, that said, let's go ahead and read it, and then I'll elaborate on certain things and give my perspective based on my experience on certain things as well. You see, you can improve your FICO scores by first fixing errors in your credit history if errors exist, and then following these guidelines to maintain a consistent and good credit history. Repairing bad credit or building credit for the first time takes patience and discipline. There is no quick way to fix the credit score. In fact, quick fix efforts are most likely to backfire. So beware of any advice that claims to improve your credit score fast. Now, we have had fast results, but we're not out here saying you're going to increase your credit score fast. I even, looked sideways at a person who said, yeah, we fix it fast. Now, I know some things you can do that helps you quicker than others. So there are some ways that can help you quicker than others. But I want people to understand building a quality profile over trying to speedily get a result. Because sometimes getting a speedy result is something that is going to backfire, just like they stated. A lot of times people are trying to buy these trade lines that has backfired, and the stories of it backfiring are only going to increase. A lot of people who were using my Jewelers Club, that has backfired. I did a video where I said, why don't refer people to the My Jewelers Club? And you might want to check that out. Shortly after that video released, a lot of people was like, you're right. You see what just happened. I didn't even know that they were about to stop reporting to the credit bureaus, but I just gave my honest perspective of why I didn't refer people to that anyway. And just so happened, the ish hit the fan and they stopped reporting, and people have to segue out of that. So why is that important? Well, it's important because you don't want to just be doing stuff because it's just recommended and it's a quick, easy fix. If it doesn't give you a quality score, then you might not want to do it. Like most people wasn't planning on buying jewelry. So why are you going to get a credit card to buy jewelry just to boost your score? It's not a quality way of building your score, in my honest opinion. So you got to think about all of those things when you're building your score. You're just taking any advice. I'd rather take you to the horse's mouth, which is, the gold standard of credit scoring, which is the myfico.com, and let you know how my experience has tapped into what they're saying, because it's based off their knowledge, and my experience as well. Before buying a house, we had 800, I had 814, and we got videos out there show, I had 2 scores in the 800s and then the 790s, and then when I bought the home, it was in the high 700s. I ain't checked it in a second, but I know, if I was to apply for something, I can get approved because I have a quality score, and it's not based on some get rich quick, some get credit up quick type shenanigans. It's all based on things that I teach you and teach my clients so that you have a quality score, not a quick score. Big difference. All right, let's go. The best advice for rebuilding credit is to manage it responsibly over time. If you haven't done that, then you'll need to repair your credit history before you see your credit score improve. The following steps will help you with that. So this is the importance of somebody helping you restore your credit. They just said you might need to clean up your report. Yes, there's something you can do yourself. We taught it. We got content that teaches it. Even if you grab a free video, you'll learn some things that you can do. But sometimes people don't have the time, the discipline, the patience, and don't want to be persistent to keep fighting and, contesting the bureaus. Once they hear it's verified, they give up. Nah, there's some other inaccuracies, some incorrect information, some errors on this report that you need to combat and possibly get your score cleaned up. So you can be cleaning up your report and building it simultaneously. So I will say that. But don't sleep on the quality that you can build on your profile by cleaning up that report. That being said, number one, check your credit report for errors. It's likely to happen. Human error, computer error, data entry error, an error on your end that led to somebody else snagging that information and it ended up on your report. Errors happen. So check your report for errors because errors can help you get things off. Carefully review your credit report from all 3 credit reporting agencies for any incorrect information, dispute inaccurate or missing information by contacting the credit reporting agency on your lender and your lender. Read more about disputing errors on your credit report. So, I'll get into that at a later date. Remember, checking your own credit report or FICO score has no impact on your credit score. Number 2, pay bills on time. I really don't have to unpack that, but 35% of your score is based on payment history. If 35% of your score is based on payment history, that's 192.5 points that comes from paying bills on time. So futuristically, you want to pay things on time, and if you have some late payments, if you can get those things cleaned up, whether it be negotiating goodwill letters or deleting an account that has an inaccuracy, only if it makes sense to do so, because you might not want to do that. So make sure you know what you're doing. Then you want to make sure your payment history is intact. So I'll read the bold print, but I won't, bore you with all of the other details. So pay your bills on time. If you have missed payments, get current, stay current. Be aware that paying off a collection account will not remove it from your report. It will stay on your report for 7 years. So that's another thing that we do. We help people get stuff, collections removed because of some inaccuracies, there's some errors, there's some things that they didn't do properly, so we get them removed. So be aware that just paying it off is not the end all be all unless you get in writing that they're going to remove it. That's all another conversation. If you are having trouble making ends meet, contact your creditors or see a legitimate credit counselor. So this is if you're having problems making ends meet. It could be some things that you can do in order to better your scenario as it relates to not hurting your credit more because of the tough time that you're enduring. That said, let's go to number 3. Reduce amount of debt you owe. So this goes into you keeping your utilization low on your credit cards as well as your loans. But I'm going to go ahead and read this. Your credit utilization or the balance of your debt to available credit contributes 30% to a FICO score. So that's 165 points. It can be easier to clean up than payment history, but it requires financial discipline and understanding the tips below. Tip 1. Keep balances low on credit cards and other revolving credit. High outstanding debt can negatively affect a credit score, so you want to keep those things low. Under 10% is what we recommend by low, or paying it off in full, using it, paying it off in full, using it, paying it off in full. Pay off debt rather than moving it around. The most effective way to improve your credit scores in this area is by paying down your revolving credit card debt. In fact, owing the same amount but having fewer accounts may lower your score. So what they're saying is, say you had 3 credit cards and you owe $3,000 on one. Okay, if you say, you know what, let me move $1,000 to one card, $1,000 to another card, so I still owe about $3,000, but it's spread on 3 different cards. They're saying that could actually lower your score versus you just paying down and leaving it on that one account. So just something to make note of. Now, there are times where you may want to transfer your card balance to another card if it's going to save you significantly on interest. Say you had an 18% interest rate on a credit card, but you had the ability to transfer that over to a 0% interest rate. That could be a good idea because if you transfer it, you may have to pay the balance transfer fee. They may be able to reimburse you just depending on your relationship. But you can transfer that over to a new card. Once that's on a new card, now you're paying 0% interest for 12 months, 18 months, 24 months, just whatever the terms are. And now, instead of you paying monthly and having that big interest attached to it, it's 0 interest. So it allows you to pay it off faster. Dollar for dollar is going towards that debt. So understanding that positions you to the likeliness of winning a good time to transfer some bills. But outside of that, just go ahead and pay it all the way off and keep those other balances low or 0 and use it, pay it off, use it, pay it off, and you'll be good to go. All right. Come up with a payment plan that puts most of your payment budget towards the higher interest rate cards first, while maintaining minimum payments on your credit account. Now, they say high interest rate because the high interest rate is what's eating away at your payments the most, like I was just saying. Some people prefer paying the lowest balance off first. I say do what you feel best fits you because both, have merit to them. Both of them are beneficial. The paying the high interest will save you more money over time when you do the math. But for some people, what I found is that if you start with a lower balance, now when you pay that off and you start taking the money that you were paying to that and dumping it into the next one, you start to build momentum. That's called the debt snowball. And more people get excited and stick and stay committed to that because they see some small wins early. They may have a car that was $200. So, okay, they pay that off this week, and boom. They feel good about themselves and they want to keep it going. Then boom, they knock that one out with $1,000 out and they feel good and they keep rolling and they stick around doing it longer. Sometimes the higher interest one might have a higher balance and it seems like it's taking forever to pay it off. So some people tap out because, they just, didn't give themselves small wins. So do what you feel works best for you. That's just my perspective on that. And don't close unused credit cards as a short-term strategy to raise your credit score. That's not a good idea. You don't want to close those credit profiles because you lose utilization, you lose credit history. Keep them open if it's a good quality card. There's certain times where you may want to close accounts if it's a secured card and, certain times you might want to low balance or low limit, certain things you might want to do. But if it's a good quality card, keep those accounts open. Don't open several new credit cards you don't need to increase your available credit. Some people open up new credit cards in order to increase their utilization. And it's times that can help, that can work if you have a strategy behind it. But just doing it just to be doing it, may not be the best bet. This approach could backfire and actually lower your credit score. There's ways to have multiple credit cards and still make sure your credit score is stellar. So just keep that in mind, but make sure you understand what you're doing and you have a strategy behind it. So that's why I wrap up on this one. No. I take that back. Because there's some more tips that I really want to hit. And I'm going to just go stick to the bold print. More tips on how you can fix your score and maintain good credit. If you have been managing credit for a short time, don't open a lot of new accounts too rapidly. Do your rate shopping for a loan within a focused period of time. So if you plan on getting a loan, shop the rates for a specific period of time so it doesn't hurt you as much. Reestablish your credit history if you have had problems. Request and check your credit report. So if you don't know where you are, then you need to find out where you are so you can know where you're heading. Apply for and open new credit accounts only as needed. Sometimes you do need some new credit because your most recent 2 years tends to have a big impact. And if you haven't had any activity over the past, X amount of years, then it may be okay to open up a new line of credit to let them know you still got it. You're still good at keeping your word and maintaining good credit. You got good credibility as it relates to paying things back. Have credit cards, but manage them responsibly. I'll leave it at that. Note that closing an account doesn't make it go away. And if you want to read it, of course, you can pause it at any time and really read it thoroughly. But closing an account doesn't make it go away. It's still on your report. So if it's open and it's on your report, it can be great if you're managing it properly. So don't just think that closing an account is going to make it go away. So hopefully this helps. Hopefully this video serves you well. Hopefully you understand how to go about having your score increase the FICO way so you can understand the things that go into it and things that you can do. And if you would like our assistance, we don't mind assisting. That's what we do. We have clients that we help across the nation assist with taking their credit from where it is to where they want it to go. In addition, grab the free credit class if you haven't already using the link below. That's all I got for this video. See you on the next one. Salute.